Good morning, Oracles. Well, looking pre-market, Tesla is up 3% as of the time of this recording. So those of us who were paying attention over the weekend, we saw crypto going up and we had seen oil coming down. So again, crypto being the leading indicator over the weekend seems to be the path that we are on right now. Looking at crypto again this morning, even crypto is creeping up even more. So seeing as how this is going, we are starting the day green so far. Let's see how the day plays out, but it's good to see that crypto is still a leading indicator going into these days. And now one thing I also did notice pre-market is oil is also creeping up. So this is where we want to see oil coming down, because right now oil is causing a massive part of what is creating inflation being so bad around the world. So we do want to see that creep back down again, because that could throw things off. But it's still nice to see that Tesla and the entire market are green to start the day. And now something I had thought about when it comes to the potential recession that we are getting into is employers and cutting costs and laying people off. So one sort of pattern that we're going to see is employers start to cut costs in anticipation of a recession coming. And when it comes to the recession, it's almost like a self-fulfilled prophecy on their end, because they've got so much inventory, as Cathie Wood had said, so they are anticipating having to cut prices to sell their product at. Well, if they're going to be cutting prices to sell their product at, that's going to be lower margins and lower profits that they're going to have to pay their employees. So they need to start cutting costs, and highest costs are going to be payroll. So employers are going to take a look and say, all right, well, how can we cut costs in payroll or reallocate those costs to a more profitable place for the company in the future, because we're anticipating that we're going to be having to cutting our prices down the road. So we've seen this with Tesla, and Tesla, they're cutting 10% of their salaried workforce, some of the hourly employees that, aren't on the production lines, and putting more people on the production lines to put out more vehicles. Because demand is so high for Teslas right now, in order for them to bring in more money, they need to produce more vehicles. So for them, it's more of a reallocation of the costs and payroll. When it comes to like retailers, they don't have any, putting more people in the front lines in the stores isn't going to sell more product for them. They just need to cut payroll and that's it. So what's going to end up happening is they start to cut payroll down. Now, when payroll gets cut, a lot of the people who are out there are consumers of their products or retail investors or both. So looking at how capitulation has just started in the market when it comes to retail investors, you start laying off more retail investors, that is less money from retail that is going to go into the market to invest. On top of that, some of these people may actually need to sell out of their positions to just cover basic living costs. So this could create a bigger domino effect when it comes to capitulation and selling the market down. So yes, while we are seeing the market going green early today, and I'd love to see the market continue to go green in the future, we've got to take a step back and be realistic. And realistically, anticipating a recession coming up in the future, seeing as how employers are already starting to lay off their employees, this could potentially be that domino effect that we're waiting for. Now, to be honest with you, it's not a bad thing, because the sooner this starts, the sooner we can get it over with, and it's going to be painful. We already knew this going into it, but we're going to start seeing that effect happening, where we are going to see employers laying people off. People are going to start, investing less and buying less of these products. So this in turn is going to create that price action where retailers start cutting their prices. When retailers start cutting their prices down, that just means we're going to get the opposite of what we had over the last year to year and a half, which was inflation going up. Now we're going to see deflation, and we're going to see that deflation happening over the next year to year and a half as prices come back down to a more realistic level. This is a good thing. This is what we are anticipating. Unfortunately, people are going to have to get laid off in the meantime, and the stock market is still going to take that last little hit. But also, as we had seen this massive GDP boom over the last year and a half, we are going to see the opposite, which is the negative GDP, which is what causes a recession. and a recession is negative GDP 2 quarters in a row, and we may get more than that. So again, we will get the GDP numbers at the end of July or beginning of August to let us know if we're technically in a recession or not. But this is just the direction we're going. And realistically, when you take a step out of it, this is a good thing, because negative GDP could mean that prices are coming down. That's negative inflation. Inflation's coming down. And this is where we want to go. So it's going to be painful to get there, but this is the direction we want to go in. And then once we start coming down and the market can anticipate when we're going to hit the bottom for that negative GDP growth and that negative inflation, that is when we are going to start seeing the market turn around again and we'll hit that bottom. And now, of course, in the process of all of this, the companies who are very weak, do not have strong balance sheets, do not have good profits coming in, or have massive debt, or a combination of all of it, we're going to start seeing those bankruptcies. Now, of course, those bankruptcies also mean more layoffs. So the economy right now is really trying to re-find its balance. We've been so off skew and off kilter with a balance over the last 2 years, with a 0% interest rate, that, we've just seen this, you could call it a bubble, but just, a really off kilter type of economy that we've been in. It's sort of like in Star Wars with the Force. The Force is not balanced right now. We have been very much on the light side, and unfortunately the dark side needs to rear its ugly head to bring us back into balance. And eventually we will get there, but to get there we have to weather the dark side and survive the dark side to get there. And so then we go back to Tesla and you say, well, how is Tesla going to weather this storm? Well, again, they've got plenty of cash flow generation coming in. They have a monster stockpile of cash. They are reallocating their costs when it comes to payroll into positions that are going to be able to produce more cash flow generation for them as they're ramping up all of their factories. We've also gotten, word about Idra sending over their 9,000 ton gigapress to Austin to be able to build that Cybertruck. We're seeing more videos of the Cybertruck that are out there. This is the time where they are ramping up production. Shanghai is really starting to crank again. Berlin is starting to put out more vehicles. So the fundamentals behind Tesla are really going to help push them to weather this storm. And if there's any EV players that are out there that are going to go bankrupt, guess what? That's more room for Tesla to grow into. And if the stock price does end up coming down any further before we end up turning around and hit a bottom, when we split, that's just going to be an even lower price to be able to buy at, because Tesla is going to be the strongest player, in my opinion, coming out of this recession that we are about to go into. Now, again, I can't see the future. I can't guarantee, and I don't know that we are actually going to get a recession. But just looking at all the data that we are seeing, starting to see employers laying people off, reallocating their payroll, there's a lot of signs pointing in this direction. And then we're going to see the housing market start to come down because of all of this. So again, it's just a rebalancing of the economy that we're about to go through. And these are the times where fortunes are born. Realistically, these are the times you look back at history, the 2008-2009 housing recession, you look back at the dot-com bubble, you look back at 1984 recession, you look back at even the Great Depression. Those were the times investing in the stock market when it was beat down as much as it was. You find those, silver lining companies in those moments. Those are the companies that are going to build you a fortune in the future. Now, talking about Tesla's stock and Q2 earnings, we're looking at the Bitcoin impairment that they could take is over, I believe it's over 500 million. I've got to double check the numbers. But I believe it's going to be a pretty significant amount of an impairment that they are going to be facing at Q2 earnings. Now, Zach Harcourt did allude to the fact that they had some things in their back pocket that they could use to offset, the downtime profits that they were losing from Shanghai. But that was long before we had seen the impairment when it came to Bitcoin. So we'll see, what these things are that they had in their back pocket, whether it's the FSD revenues that they're going to be reflecting into this, whether maybe they sold Bitcoin and we don't know it. And I don't know what other little things that they have in their back pocket that they could use to offset this, but it's going to be a significant amount. And if we end up getting to this point where, the Q2 earnings come out across the board, we're anticipating quite negative Q2 earnings. with all companies. So Tesla is going to be one of them for a multitude of reasons. And if the stock does end up pulling back because of this, again, it's really, in my opinion, another great buying opportunity for even more on the cheap. Because looking down the road, and I'm going to go over the numbers this weekend for myself, you look at what is the reason you are investing in Tesla. Let me know in the comments below what the reason is that you're investing in Tesla. For me, I'm investing in Tesla because I want to see a green future for my son and for my future generations. I would love to see the world transition over to renewable energy. I see this as the future for a better humanity down the road. And for me, this is how I'm also going to generate generational wealth for them as well. And so looking at generating this wealth for myself to be able to retire and then pass it along to my son, I say, well, how many shares of Tesla do I need by 2025 or 2030 to be able to retire? So again, I'll do that math and share that video with you guys this weekend. But when you look at that and you say, well, when you look at it in a matter of how many shares do I need, well, when you're going out to buy as much of anything that you can out there, let's say you want to go buy pizza. How many pizzas can I buy? Well, if I could buy pizzas for $20 or $10, well, you can obviously buy more pizzas for $10 than you can for $20 because it's less. You could buy twice as many pizzas for half the price. That's how we're looking at Tesla stock. If you see Tesla stock going to where we think we are going to see it in the future, well, how many shares do you need in order to get there? Well, the less you have to pay for them now, the more you can buy now, which means that when they become more valuable in the future, you'll have more. That's just how it's working out. So the lower the price is, the more you can buy now, the earlier you'll be able to retire. So again, I'll work those numbers out because I've got to update my valuation model. And I'm not going to, and I spoke with a few of you, I'm not going to update my valuation model until we actually get the split. Yes, I'm anticipating that we are going to be everybody voting yes, and it's going to end up happening. But I'm the kind of guy who is going to be like, I will wait to make sure it actually does happen before I spend and invest any of my time in updating my valuation model at that point. If I've got some free time, maybe I'll play around with it and have both valuation models up. But otherwise, I'm going to wait until we actually get the split before I actually put this out there and update my valuation model. Again, it doesn't even matter because when it comes to a split, the valuation of the company and the stock does not change. So it's really just a matter of dividing everything by 3. So all the numbers that I have there, just divide by 3. And that's realistically what we have. The bigger part of changing my valuation model has more to do with the macro environment, because the macro environment could be suppressing us for a little bit longer than I had anticipated. So I'll probably end up bringing my price target down, at least for the end of the year. But I do keep my price target for 12 months. But unfortunately, 12 months is going to be June of next year rather than December of this year. Let me know in the comments below. Have you guys noticed anything maybe in your place of employment with them starting to cut back on any payroll? Have you heard anything about, maybe them trying to cut costs and be more careful about the future because they are anticipating a recession coming up? This is good information to have to see from all of you guys in real time with real people, versus what we just see in the news and the headlines. I want to know from you guys what is really going on in your lives that you are witnessing. And also, let me know what your price targets are now for the end of this year. As I said, I'm going to be cutting mine back due to the macro environment, just being more suppressed for longer than I had anticipated. So let me know what you guys have for a price target for the end of the year and if you have changed it at all. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat. That link is in the description down below. And if you'd like to support the channel any further, I do have a Patreon, and I share all of my price targets, my production forecast, and all of my income and investment statements there as well. Thank you so much. Have a great one.